Hello, everyone. Welcome to this week's Investment Trends, where we discuss the latest news in the stock market and the economy. So the big news this week should come as no surprise. Fed Chair Jerome Powell decided to cut interest rates. So he indicated that he would do so when he spoke at Jackson Hole, and now he decided to cut interest rates by 50 basis points. So this brings the Fed Reserve rate down below 5%. So the fact that he cut interest rates should come as no surprise. However, the amount that he cut it by is a little bit alarming to some. So he cut the rates by 50 basis points when originally it was projected that he would only cut them by 25 basis points. So a couple of the comments that he made was that he believes that we are not in fear of having a recession. He also believes that the labor market is strong and that inflation is where it needed to be in order to make this interest rate cut. So the markets reacted very positively to that news on Thursday. So we actually saw a little bit of a retreat in stock prices Wednesday afternoon. I think they were a little bit surprised by the 50 basis point cut. However, on Thursday, euphoria in the market as the S&P 500 reached an all-time record high for the 39th time this year. The Dow Jones Industrial Average also reached a new all-time high as well. Some of the big winners on the day for Thursday were Microsoft, Apple. We also saw big gains in Goldman Sachs and JP Morgan. So that's something to keep an eye on as we come out of this. We're now in an interest rate cutting environment. What would that potentially do to bonds? What does it also do to small cap stocks? So some of the news Friday morning in the pre-market and the futures were pointing slightly down on the day. And one of the big news items is the FedEx earnings report. So FedEx came out and their stock is now trading down in the pre-markets as much as 13% because they are forecasting slower growth and potentially weaker demand going forward. So something to keep an eye on with the interest rate cuts. What would this do to mortgage rates and how would this potentially impact them? So for those of you that may be paying attention to this, you might have saw that the 30-year mortgage rate actually ticked up higher this week. That is because it goes based off of the 10-year Treasury rate. So if you're looking to purchase a house, you might be a little bit confused, expecting it to go below or lower, maybe in the 5 to 5.5 range. However, 30-year mortgage rates actually stayed around the 6 to 6.5% range currently. So it may take a little bit of time before we see these interest rate cuts start to make an impact on the economy, on interest rates, on things like loans and mortgages. So for those of you that are potentially looking to buy a house, might have to wait and see what happens for the rest of the year. The rest of the year, the Fed indicated that they may cut interest rates by another 0.5 percentage point. However, they said that they will not make this steep of cuts at any one given meeting going forward. So something to keep an eye on, something that many investors have been waiting for is interest rates to cut down. This could lead to a little bit of stimulus for the economy and a little bit of growth in GDP and in the job market. So that's what I've got for this week. Leave a comment below if you're seeing any other investment trends that you're following.